Yo, what's up, everybody? Welcome back to another episode of Momentum number 263. We're back home, back to my normal place where we shoot all these videos. I guess back in my element. I love this place. I love doing all these videos here. I feel like I'm back in the swing of things. Today's video is we're recapping what happened this past week, what we went over with financial freedom at the financial freedom event. I think what was the coolest thing about this whole entire thing was this is something that I wanted to get even better at, and I would just, when I say even better, I mean just better in general at managing our money, right? And I think it's just as we continue to ascend as entrepreneurs, business owners, it's important that we not just focus on just making money, but making good decisions with the money we make, right? That's what the wealthy do. There's a lot of high income earners that get rich, but they never get wealthy, right? They blow all the money that they make. And I mean, I have been guilty certainly at times of making money and spending it. I don't know about you guys, but finally you make some money and then you start buying some things. You're like, oh my gosh, where's the money going? Right? So if we don't have a plan, your money's naturally going to find a different home, right? That's just one of the sayings that I heard. And I'm like, that's so good. So today I want to dive a little bit deeper in the concept that we talked about yesterday, which was the 15 different areas you could kind of allocate your money. I want to show you guys where I'm at with some of the things that I'm doing, and then you can kind of take what I, put out here right now and kind of the strategies that I've gotten away and what I've currently been doing, and just kind of set forth maybe a plan of action for yourself. I'm going to give you guys a book recommendation too at the end of this video, so please be sure to tune in, stay here, because this book that I have just recently just finished, I finished it in a day and a half, like was freaking amazing. It changed the way that I look at money in general. So I know you guys will get some good takeaways from that too. So without further ado, let's hop right into it. I'm going to change my camera here to this guy, put myself down here in the corner, and I want to talk about those 15 things. So my screen should be pulled up, and yeah, let's get going. So I'm going to go ahead and put here the asset allocation. Okay. Well, if my pen wanted to work. So let's see if we can tap here. Here we go. And oh, we're on eraser. Okay. So asset allocation. So I got a question after last night's video, and I'm like, let's take some time and just dive maybe a little bit more deep into this particular topic. So asset allocation. I'm going to make this a little bit more thin. So here we go. Asset allocation. We were talking about the 15 different asset classes. You guys remember we touched on real estate, we touched on crypto, we touched on stocks, we touched on precious metals, whole life insurance policies, cash, collectibles, private equity. I mean, so many different things. So hopefully you guys have been brainstorming from yesterday's video and kind of leads into what we're doing today. So some of you guys had asked like, hey, so where should I really be if I'm starting to take note of where my money is currently at? Like, where should I be as far as like my net worth, right? So you kind of work your way backwards. Like right now, you guys, if you're watching this video, where is your money currently allocated? Do you currently have more cash than anything, right? So you don't really, maybe you don't have a ton of assets. Maybe you have some crypto, maybe you have some stocks, but most of your money, most of your wealth is held in cash, right? Cash isn't, you know, too much cash. It's funny because at the event, Colin, like too much cash is trash, but too little cash is anxiety, right? So like you want to be able to have enough cash to where like you feel like you can live and survive and you can live your lifestyle. At the same time, you don't want to keep majority of your wealth there. So let's go over what this currently looks like for me and what the targets should be. So first and foremost, like most of you guys on this channel, we're real estate professionals, right? So real estate. And as you're taking note of your own stuff, right, I highly recommend do two different columns, right? So I have an A, and I'll make this line all the way down. And you have a T, right? So you have an A column and a T column. A is for your actual, T is for your target, right? In real estate, your target allocation should be anywhere from 45 to 55% of your total net worth, right? This is just to like again, we're real estate professionals. Maybe some of you guys are even heavier in real estate, but this is a good place to be sitting. So you're not totally all in just in case something happens to the market, which it will here within the next 18, 24 months. So you want to be prepared, right? So what is your actual and what is your target? A good target number is 45 to 55%. Okay? Is everyone following here? Actual target. The next thing that I believe in, that I do invest in, is crypto, right? Based on, what Ray Dalio and some of the people that are way smarter than me, Tony Robbins and some of these other folks, they're saying to hold anywhere from 8 to 10% of your net worth in crypto. They believe in it. I believe in it. I'm a huge believer in it. If you're not acquainted or you don't know a lot about crypto, it's not just a, buy high, sell, buy low, sell high kind of thing. There's amazing opportunities to stake your crypto. I won't go into that in this video, but you can actually stake your crypto, and make interest on the crypto that you have, right? Just by staking it, holding on to Ethereum and Bitcoin. So you can always make money on the alternate coins. You guys have heard of Shiba and Dogecoin and Cardano and all these other projects. You can buy those, but the idea is to hold Ethereum and Bitcoin. You can actually stake your money in that. I mean, I got um someone in my network I know makes almost $600 a day just off the interest of his Bitcoin. How crazy is that? It's insane. So crypto, anywhere from 8 to 10%. So if you don't know anything about crypto, I highly recommend you learn. And I'm going to talk to you guys about this concept here in a second of what these opportunities are. The next thing is stocks. So I'm just giving you guys the 7 things that I currently invest in and what I want to go heavier in. I'm not in 15, currently in 7. And I mean, I would love to diversify even more, but again, I'm just giving you guys a good idea and a good foundation. So stocks. So this is S&P 500. This is index funds, right? So or just companies that you believe in. And I'm gonna talk about what those companies should look like. But you're gonna be sitting somewhere around 10% on asset allocations on stocks, right? So real estate, crypto, stocks, actual target. Real estate somewhere between 45 to 55%, crypto 8 to 10%, stocks 10%. Precious metals is the next one. So silver, gold, metals. Okay. Actual target. Your target here on precious metals, right? This is liquid. It's a great place to preserve your cash. This is wealth preservation. 5%. Okay. Everyone following here? Next thing. So that's 4. The fifth thing is your whole life policy. Whole life policy. So again, this whole life your whole life policy is another great method of just wealth preservation. It builds in cash value as you put more money in, and I mean it has a dividend. And after about 5 to 7 years, you really start to see that thing compound. The idea behind all of this, stocks, crypto, whole life, these sorts of things, is getting in early, getting in super early so your money can compound. Right? It's not that you need to invest more money. If you get in early enough, like, I mean, you look at Warren Buffett, he started investing when he was 10 years old, right? The money that he has been able to accumulate in his lifetime is largely, he hasn't had I mean, he's had great returns, but he hasn't had crazy high returns to some of these people that have been investing in a shorter amount of time, but he has a tremendous amount more money simply because he started earlier. He allowed his money to start compounding decades before some of these other folks even got a chance to start investing in their life. So getting in early is super important. Okay? Whole life policy 10%. Okay. And again, I'm going to give you guys a book recommendation after we finish here so you can get a better understanding of what I'm talking about. Next thing, cash is actually an asset allocation. You can allocate your net worth to your cash. Currently, I sit around 15%, right? And that should be a goal. Your goal should be anywhere from 15 to 20%, but I think 15% is a really good number. And then I hold collectibles. So if you guys don't hold collectibles, I mean, you could take this somewhere else, but I hold collectibles like sports cards, shoes, things of that nature. And it's funny because about 5% of my what they recommend as well, no more than 5% should be held in something like that. So collectibles is a wealth preservation for the most part. they're not going to, tremendously appreciate between all of your things, but it's a good place to hold your money and it would probably beat inflation over time, right? Or just kind of be on point with that. So if you add all these things up, if you take 45% at real estate, right, and you take the 10% here at crypto, this is going to equal 100%. So hopefully you guys did your homework from yesterday's video. This is seven things. All of this is seven things. Now, remember what I said. The wealthiest people diversify their wealth in up to 15 or over 15 things, right? So if you're able to do that, statistics show that you have an 80% chance, a little less likely chance of going broke, right? But if you only have five or less, your chance of losing everything increases by 60% amongst the wealthy. So it's important that we do the best we can to allocate our wealth appropriately, right? So I hope you guys did your homework and you started writing some of this stuff down. This was something that I thought was just really cool at this event and starting to be um, just more aware of where your money's at, more aware of like, hey, how can you start setting some goals to maybe diversify a little bit? Hey, how can you like realistically, if we want to get to, $1 million in net worth, $2 million in net worth, 5, 10, how do you increase your net worth? It's by being super intentional, right? It's funny because money is more about the habits that you have rather than just the math behind it. So habits mean everything. And that leads me to a couple concepts I want to give you guys. So when you're looking for crypto opportunities, right? I'm just going to put a check. When you're looking for crypto opportunities and you're looking for opportunities, I mean, even just like real estate and precious metals, these sorts of things, you're looking for something that's called an asymmetrical, I'm probably going to spell this wrong, opportunity. Okay. Meaning that the upside is absolutely ridiculous. You look at these companies that that you can look in, like right now, like silver being traded at 1/60th of gold, and that over time we have seen that typically silver is traded at 1/16th of gold. Okay, well, there's a good chance that some one way or the other silver is going to catch up to gold, whether that be gold dropping or silver increasing. So with the modern inflation, you can probably see silver right now it's going to increase in value, so that would be an asymmetrical opportunity. Companies that just have their IPO that are getting started, and you can base their company, their business model around other competitors in their space, and they bring something unique to the marketplace, and they're newer on an asymmetrical opportunity. Amazon 12 years ago would have been an asymmetrical opportunity, right? It's spotting those trends. You're looking for asymmetrical opportunities. Same thing with crypto. You can get in early on crypto on some of these projects if you're following the right people and you're getting the right information. You can get asymmetrical opportunities in crypto all the time, right? The challenge with crypto is just obviously it's not near as mature as real estate, which isn't even as mature as stocks, which isn't even as mature as your whole life policy. So like understand the more newer these investments are, like crypto, you're going to be taking on substantially more risk. But at the same time, there is just an incredible opportunity to make more money in investing in it right now, right? And it's the investment opportunity in crypto. It's not going to be the same in 10 years as it is today, right? So you take that into account, right? You got to be able to say, all right, well, how much money can I realistically invest in these things that makes the most sense, right? And typically, all of this comes from setting 20% aside. So you want to set 20% of your pay when you get paid to what we call your financial freedom account. Okay. So whenever you get paid, 20 cent on the dollar, every 20 cents goes into an account so you can invest in these things, right? You can start allocating your assets. Now, maybe you want to be a little bit more aggressive. That's completely up to you, but a good standard, something that you can do that you can control and be super disciplined on is 20%. 20% of your money you make goes to your financial freedom account so you can make these investments. Again, some of these are a little bit more risky than others. These are the seven that I've chosen that I know and that I do currently invest in that I want to go even heavier in, but hopefully start diversifying, maybe get closer to 10, then eventually get to 15. But this is a good place to start. So some of you guys are asking, how much do they recommend? The experts recommend you put into these assets. It really depends on how you diversify your portfolio. But for the most part, for us on this channel, we're in real estate. This number is super important. 45 to 55%. 45 to 55% in real estate is the big number. So if you're heavier in it, just might be a good opportunity, a good thing to be conscious about diversifying a little bit more and putting your money elsewhere, right? So we're looking for asymmetrical opportunities whenever we're investing. That's super duper important. Doing our research, not just, hearing hearsay and then investing our money. That's just gambling, right? We're doing our homework or we're having someone do the homework for us and we're looking for asymmetrical opportunities. Tell you guys right now, there's a ton of asymmetrical opportunities in crypto. Um, Commercial real estate is a asymmetrical opportunity. You're looking at there's a lot of index fund companies, a lot of S&P 500 companies that are asymmetrical. There's a brokerage called Real Brokerage that is very similar to what EXP was 5-6 years ago. That's a really good company to possibly potentially look at. Again, I'm not a financial advisor. You guys do your own homework, but that's what you're looking for asymmetrical opportunities. So this event was super dope. Learned a lot of cool things. Hopefully you guys have too. Checking out this channel. If you get value from our stuff, head over to the YouTube channel, hit subscribe. We finally broke that 1,000 mark, and we're just going to continue on. I love coming live, flying in, and I know it's a little late at night now, but I still wanted to come live because this is just so important. And guys, hopefully you're doing your homework and you're writing all this stuff down. Look for those asymmetrical opportunities. Now, for the book recommendation, I absolutely love this book. This came from Cody. It's called The Psychology. Sorry. Logi of Money. The Psychology of Money. I highly recommend you pick it up. Highly, highly, highly recommend picking it up. It's not just about making money. It's the idea. It's not the X's and O's. It's not going to say, here's how you fill out a ledger. Here's how balance your books. It's a lot around the habits of what the wealthy people do, the habits of creating like a healthy relationship with money and making better decisions when it comes to the money that we make. We all come from different backgrounds. We all have different experiences. We all have things that have shaped our financial well-being, our financial view on money, whether it be our parents, our grandparents, our environment, where we grew up, with the time we grew up. Were we born in the 90s where there's no inflation? Were we born in the 80s, the 70s? Maybe some of you guys are born in the 2000s, right? And things have been really, really, really good. So, like, the psychology of money is based around like, hey, we know, like, we understand that we're all from different places. We all have different, you know, relationships with money, but helps us make better decisions around that. The Psychology of Money. Pick it up. Amazing, amazing, amazing book. But there we go, guys. Be more intentional where you're putting your wealth in. Set a target. Set a target and try to hit it. Especially heading into 2022. Hope you guys had amazing 2021. But being more intentional with where our money is. I know a lot of times, me personally, get caught up in the grind of the day to day of getting more deals and trying to grow the business and doing all these things for arbitrary numbers. But then very seldomly looking back and saying, hey, where's my money currently at? Is like most of my money working for me? Am I actually doing am I preaching? Am I doing what I'm actually saying, right? And that's super duper important, and making sure that you're set up for, hey, not just being a slave to active income forever, but making sure your money is actually going to work and making sure that you're going to be actually absolutely financially free, because that's the goal. We want to be able to do what we want when we want, and it'll be awesome if you're able to do that with passive income. So when your passive income surpasses your lifestyle needs and your basic needs, that is when you're financially free. So that is the purpose of this stuff. So hopefully you guys take it serious. I know I am for sure taking it hella serious. So guys, I appreciate you so much. Hopefully you get value from these videos. Hope you got value from today. I know I got a ton of value from this mastermind. We'll be coming live again tomorrow. I think we have a couple appointments, and then on Sunday is going to be a day of a lot of appointments. Then we're heading into next week. Going to be announcing that I'll be taking my wife along with me in the truck. I'm going to be showing her how to get her first real estate deal, and it's going to be a ton of fun. But I'll go a little bit more into into detail on that later. But guys, thank you so much for coming and hanging out. I hope you have a wonderful, wonderful Friday night. We'll see you next time.